When talking about stock options, there are many common questions that come up. Which strike price should I trade? Should I buy or sell the options? Should I use monthly or weekly options? Now, the reason these questions can be tricky is that there's no perfect answer that fits each situation. It all depends on your outlook and what you're looking to accomplish with that trade. So let's talk about the different expiration cycles in more detail. Now, over the past few years, weekly options have become very popular with traders because in most cases, they provide a cheap way for the retail trader to get into a trade. Weekly options expire each Friday, which means they are great products for traders looking for quick movements in the stock or the ETF. However, are they always the best products to use? Well, it all depends on your outlook for the stock or the ETF. Before we go any further, let's talk about the Greeks for a moment. Options traders use the Greeks to track how the price of an option will change based on the changing market conditions. Take delta, for example. The delta of an option tells a trader how much the price of an option will change for every $1 move in the stock. So if an Apple 95 call option has a delta of 0.5, that means for every $1 move that Apple stock makes, the 95 call will change by 0.5. This can be helpful as traders try and plan out their trades. Now, the second Greek that can be very helpful is called gamma. The gamma of an option tells the trader how much the delta is going to change for every $1 move in the stock. So let's go back to our Apple 95 call that had a delta of 50 cents. We know that if Apple moves from 95 to 96, the call option will increase in value by 50 cents. However, the delta will also change as the price of the stock changes. Now, once Apple goes from $95 to $96 per share, the delta could then be at 75 cents. This means the delta has changed by 0.25, 25 cents, from 50 to 75 cents. The 25-cent change in the delta after Apple moved $1 is known as the gamma. So if Apple continues to rally further from 96 to 97, their call option will increase in value by 0.75, 75 cents, for that $1 move in Apple. In other words, gamma can be viewed as the fuel that's thrown on the fire. So let's go back to our discussion of whether we should use the monthly or the weekly options. Now, we said that it all depends on your outlook for the stock or the ETF. So if you're expecting a quick move in the next few days, then the weekly options will give us the most bang for our buck. This is due to the fact that gamma is higher the closer we get to expiration. As a result of the higher gamma in the weekly option, the price of those options will react quicker to movement in the stock. We will see more powerful moves as long as the move happens quick enough. Now remember that options are decaying assets, which means the longer we hold them, the more time value comes out. Now, as long as the move happens quick enough, then we can overcome the time decay. If we're expecting a directional move in the stock, but the overall market is moving slower, the monthly options will be a better choice. Now, the gamma is not going to be as high, which means the options react slower to changes in the stock price, but it also means that the time decay won't be as high. As a result, if the move takes longer than expected, we still have a good chance of being profitable. So to summarize, if you're expecting a quick move in the stock or the ETF, then weekly options will give you the best potential for a home run play. It is a more aggressive way of taking the trade. If you want a more conservative trade that gives you more time to be right, then the monthly option will be best. Now, while the Greeks can be complex at first, as you can see, just knowing some of the basics will help you increase the odds of success. Options are very, very flexible products, and they allow us to structure trades to fit our outlook on the markets, unlike any other product out there. Now, we cover the Greeks in detail in part of our Options Fast Track course, which will walk you through how to trade options at NetPicks. Knowing how an option will react to changing market conditions will lead to more profitable results.